Hey everyone, this is RC Peck. Thanks so much for being here. The name of this training is Fearless Wealth, 5 Shifts to Creating Reliable, Consistent Returns Now. Now, just a couple things. First of all, I am not feeling well. I have 2 kids. I'm married, have been married for 13 years, and there have been two colds swirling around our house, one flu and one norovirus the last probably 3 or 4 weeks, and it just keeps going around and round. And the crazy thing is, like, we're really healthy. Our kids almost never get sick. Burgess and I almost never get sick, and these colds and viruses and flus have just landed in our house, and they've just kind of moved in. So if you hear me cough or take some swigs of water, it's because I am not 100%, but I am here with you, and what we're doing here is super important, and I want to make sure you get it. So thank you for being here. We're going to jump into things, and we're going to get going. So who is this for? And this is important because this is actually not for everyone. So this is for people who have or have used big box advisors and realized all they gave you were kind of the market returns minus fees, commissions, and expenses. This is for people who've tried big box advisors and realized that they're not actually putting your interests first. Now, that's slightly different from the first one I mentioned to you. But you're noticing that these advisors, they're not doing what is best for you. They're kind of aligning your money with their business model. Or 3, this is for people who kind of then spent time inside the $1 billion pick of the month newsletter industry with even worse results than what they got at the big box advisors, but they're still wondering what really works in investing and growing your net worth. That's who this is for. Now look, in the next 60 minutes, let's talk about what I want to cover because I want you to hold me to it. So first, I'm going to show you how to never miss out on the next major multi-year stock market move. So I just want you to get this is not about day trading or trading. This is about getting the big picture right. Because when you get the big picture right, you get everything right. In the next 60 minutes, I want to show you how to produce reliable and consistent returns without trading or reading newsletters or spending time in front of the computer. Really, even if that seems like a ridiculous thing to say, given the volatility in the market and the economy. And I want to show you in the next 60 minutes how to never be hurt again by large market falls. Okay, so I want to let you know how you will know with complete clarity you will have enough money for the rest of your life. And I'm going to show you that in the next 60 minutes. Because one of the things that I hear over and over again, and I've been in this business for over 2 decades, and the business I'm talking about is how to show people what really works. I'm a registered investment advisor. I'm a certified financial planner. So I'm not just a person who writes newsletters, an editor, an English major, but someone who's actually in the markets managing the money for people or showing them how to do it. But I'm going to show you how you'll know with complete clarity how to get enough money for the rest of your life, right? How to eliminate. I'm going to show you how to eliminate the investment noise that so often hijacks your brain into thinking the next crash is imminent. Okay, but here's like my really, really big promise. I'm going to show you the 5 steps our top clients use to produce consistent and reliable returns without trading or reading investment newsletters, right? And this is all without having to watch the stock market closely. That's kind of like my big, big promise to you, right? Now, if you were thinking or concerned, there's absolutely nothing to buy on this training, nothing. I do want to share something really interesting with you at the end. I was invited as a guest to a conference in Manhattan where 300 of the top hedge funds were invited. And I was invited because I am a friend of the person who puts on this annual event. And they brought one of my favorite speakers is this guy, Adam R. Now, I'll tell you what Adam's last name is at the end, but Adam R. spoke to this group. And he said one thing that there was this polarizing event in the crowd. About 70 or 80% of the crowd was like, no. And 20% of the crowd, and again, remember, these are the top hedge funds on the planet, not just any hedge funds. And about 20% of the crowd was like, oh yeah, no, that's right. That's exactly right. And I will tell you, in that group of the top 20, or the 20, were some of the top hedge funds on the planet. So we're talking about the top of the top of the top. When this Adam R said what he said, the top of the top of the top said, oh yeah. And the bottom 80% of the top were like, nah, I don't know if that's true. So I want to share that with you. And that's something I just want to give you as kind of a really cool gift. So look, if the following doesn't sound like you, then you can save yourself some time and you can cut out early. All right, so tell me if this sounds like you. You buy pick of the month newsletters with high hopes that you'll finally make up for lost time, only to end up in overwhelm mode again, right? You buy all these stories, but you end up with these bad investments. You're looking for the right way to eliminate the fear around the next market crash so your money can grow. And you'd like to know, in case you didn't know, we sidestepped both the 2000.com crash and the 2008 global financial crisis. And so you'd like to know, hey, how did you do that both times? Also, you have your money with a big box advisor, and or you want to leave, but you're not sure what to do, or you have left a big box advisor already and your money's still sitting or kind of getting lost in the pick of the month newsletter industry. And you don't have more time to watch the market closer. And lastly, you want to generate consistent, reliable returns in any market condition, no matter who or what is being manipulated, right? So if this sounds like you, right, you don't want to be at the whim of the market anymore, right? You don't want to be at the whim of the manipulators. You don't want to continue to struggle with your investments. You don't want to continue groping in the dark looking for the next moonshot pick of the month investment, right? You don't want to continue buying great stories but ending up with lousy stocks. You want to get unstuck. What this comes down to is you don't want to get hurt again. You don't want to get hurt again. And you don't want to miss out again. And it's these two things that you want that kind of in your brain play against each other, right? On one hand, you do not want to get hurt again. But yet on the other hand, you don't want to miss out. And so what happens is, because you don't have a checklist, because you don't have a rules-based strategy, right? Because you aren't completely clear about what to do and not to do, you're kind of getting bounced between not wanting to get hurt again and not wanting to miss out again. And because you're getting bounced between the two, you end up getting hurt again and you end up missing out again. So if you want to end this, then stick around. I'm going to show you right now what to do. But here's the thing, what I just mentioned to you, those aren't, like, if those are the things why you're here and those are the things that concern you, let me just say they're not the real problem. They're not the real problem. I understand you don't want to be manipulated and get whipped around and be stuck in that pick of the month newsletter billion-dollar industry and be at the whim of even your big box advisor or the next fall or missing out or getting hurt again. I understand that. But those aren't the real problems. The real problem is you haven't made these 5 power shifts that I'm going to share with you. And once you make them, everything looks different. Your consistency changes, your reliability changes, your connection with the market, how you approach your money, knowing you'll have enough, knowing you will not run out of it, knowing you won't be a burden, knowing you will live into a future with more security and more freedom and more choices. It's because you haven't made these 5 power shifts. Now, once you make these 5 power shifts, right, once you make them, you'll reclaim that power to control your future and your stock market portfolio. You'll experience your future as certain and secure. You will avoid all future market crashes. Not 100%. So, the next 50 or 60% market crash, this isn't about you being out with 0% drawdown, but this is you getting out, with 90% of the fall still in front. And you will know You know you'll avoid those future market crashes. And if you don't like the word crash because it's too hypey, then market correction, market fall, market drawdown, you will know with confidence and certainty that you will avoid the next one. And once you make these 5 power shifts, you know you'll have enough money. You know you will not run out of it. Right? You know you will have more stability in your life, in your future, in your marriage, because you'll eliminate that stock market stress and anxiety, and you'll experience the future as certain. You know you will not miss out on the next major market move higher. We're talking about these multi-year moves. Again, this is not day trading or having to spend more time paying closer attention to the market. No, that actually does the exact opposite of what you want. I'm going to show you. And you know you'll not get hurt again. So, the one thing you need to know, this is the one thing you need to know. There's these 5 power shifts that you need to make so you'll not miss out again on the next major move higher, and you will not get hurt again when the market does crash. And you can do this all without having to watch the market closely. Now, I want to tell you how I know this. So, I've been in the business of helping people for over 2 decades. And when I built and I came up with this training of these 5 power shifts, I reached out to the hundreds and hundreds and hundreds and thousands of people that had hired me over the last 2 decades. And I said to them, which of these 5 shifts have you not been doing? So I presupposed that there were some of them they weren't doing. And I waited for the answers to come back, right? So there's 5 shifts, and I emailed and I called and I did a concerted effort to reach out to my tribe over the last 2 decades and said, okay, of these 5 power shifts, which of the 5 didn't you do? And here's what came back. And this is really interesting, and one thing I want to share with you before we get into the 5 shifts. There were a small group of people that came back and said, oh, what do you mean? I do them all. You told me to do the 5 shifts, and I do all 5 shifts. I said, okay, great, thank you. And then the other group came back and said, well, I do 3 of the 5, but not these 2 because I don't have time. Or I do 4 of them, but not this one, the 5th one. Or I do these 2, but not these 3 over here. Okay. Now, I kept something out. That I will now share with you, but I did before I asked them. Before I asked them which shifts they weren't following, I said, hey, how have your market returns been over the last 5 or 10 or 15 or 20 years? And they replied to me. They said, oh, this is what they are. And across the board, the clients who emailed back the second series of questions, which was, which of the 5 shifts are you not following? The ones who said, oh, no, I'm following them all. The ones who said they're following them all, their returns were noticeably better than the ones who were not following all 5 shifts. Now, a couple things. The ones who are not following, their returns are still much better than almost everyone else's. But the fact that the people who follow these 5 shifts have better returns and more security and more freedom and more calmness and know they're going to have enough means these shifts are really important. That's why I want to share them with you. And I'm going to walk you through exactly how to make those 5 power shifts right now. Now, before we jump in, just a couple things about me really quick. I already told you I have 2 kids. I already told you we're all sick, and that's why I sound kind of scratchy. A couple things about me. One, my 7-year rolling returns are 146% versus the S&P 500's with dividends reinvested is 47% during the exact same 19-year period. So just give clarity. First of all, almost no one beats the S&P 500 with dividends reinvested. And I'm serious when I say almost no one. Probably 98% of people do not even get the S&P returns with dividends reinvested. But if they did, they'd be beating probably almost everyone, and their 7-year rolling returns would be about 47%. Mine are 146%, over any rolling 7-year period during the last 19 years. I avoided the dot-com crash of 2000 and the 2008 global financial crash and got back into the market after the bottom 5 months after both collapses. And really my specialty is helping people who've tried the big box advisors and gotten lost. And then I should probably say, and then had gotten lost in the pick of the month newsletter industry. That's who I help. And I describe it as people who are skeptical, but still open. If you've already gotten to cynical, I can't help you. And if you're not at least skeptical, you're still looking for that moonshot pick of the month, gain everything back in one ticker symbol, and I cannot help you. And I've been a regular on CNBC, Bloomberg, NBC, ABC. So I've been around for a couple decades. I've spent my entire adult life sitting at the crossroads of people's behavior and investing and watching what works and doesn't work. So with that, let's get into the 5 shifts. Okay, so the 5 power shifts. Let's talk about the first power shift. These are very powerful. You may want to take notes. The first power shift is invest with total clarity. Invest with total clarity. Now, I was a little reluctant to show this background image because it looks like in order to invest, you have to use like 1,000 dials and very complicated systems. But that is not true. The reason I showed this is because when I saw this picture, and this is a British fighter, not an American fighter, it seemed very clear with the dials and the amount of glass that this person can be very clear in which direction they're going. And look, if you want to have reliable returns and consistent returns, you better have clarity. So the first power shift is invest with total clarity. And I want to show you this one piece of information here because this is really telling. Now, what happens with people who take on their own investing? I'm going to call them a do-it-yourself investor. They're called different things. Some people call them active investors. But it's a do-it-yourself stock investor. And these are people who have left the big box advising world and they said, I can do better. So the results are very clear and very consistent that people who take on managing their own money in an active way, i.e. live in the pick of the month newsletter world, I know that their returns are almost 3 times worse than the stock market. Almost 3 times worse than the stock market. Now, there's a company called Delbar Research out of Boston. They've been around 40 or 50 years. And they measure stock market returns, S&P 500 with dividends reinvested. And they compare it to active investors, pick of the month newsletter buyers. And they compare the two and say, okay, how are they doing? And across the board over any 20-year and 30-year rolling period, pick of the month newsletter investors do 3 times worse than the stock market. Now, this 3x number varies between 2.5x worse to 3.5x worse. But this is devastating. This brings a lot of insecurity. This brings up a lot of like, I don't know. I guess I'm going to have to be at the whim of the market and the manipulators. Like, I'm going to have to continue to struggle. I am going to have to look for the next, kind of groping in the dark, looking for the next moonshot, pick of the month investment. Right? Because these people, they keep hurting themselves and they don't understand how they keep hurting themselves. But the data is very, very, very clear. And I just want you to hear this. Most people don't have any clarity on how much they're hurting themselves because they're not tracking. And this is just one example. And this is over any 20-year rolling period over the last 40 or 50 years. The do-it-yourself investors, the pick of the month newsletter investors, they're literally killing their own future because they're not clear on what is and is not working. You have to invest with total clarity. You want stability? You want consistency? You want reliability with your stock market money? Yes, you do because you're on this training. So yes, you do. Okay. So I call it focus point. Here's focus point number 1. The more stability you want, the more clarity you have to have. Absolutely. Focus point number 2, the more consistency you want, the more clarity you need. Did you notice I'm not saying stock pick? I'm not saying amazing story written by the best admin in the country. I'm talking about clarity. Focus point number 3, you want more reliability? Then you need more clarity. This is about clarity. Now, here's the good news. This is completely in your control, completely in your control. I had a client come to me, a prospect who was, then a client, in his early 60s and earning well. He is a professional, a doctor. And I had him do this first step, as I have all my clients take this first step. And he really gave a lot of pushback. Actually, I don't have time. I don't have time for this. I got my practice. I got my marriage. I got my kids. I got to work out and on. And I said, yeah, I got that. And you're going to do this. And it went back and forth. And look, I'm 45 years old. He's older than me. So, he was kind of playing the age card and the experience card. I said, yeah, when it comes to this, you're going to do this. So we went back and forth. And finally, he's like, all right, I'm going to do it, but I'm just, okay. And he was a good guy, but I was really, in a good way, I was pushing him to get his money to grow and work hard for him. And so he did. He's like, okay, I'll do it. Okay. And I said, yeah, I got it. You don't want to do it. So he did it. And I talked to him the next week. And I asked him before that, I said, are you an investor or a trader? He goes, I'm an investor. I don't have time to be a trader. I'm an investor. All right. Just, calm down. So when he came back, he had 85 open and closed positions total for the 12 months. 12 months prior to him doing this. So over the last 12 months, he had 85 positions that were closed out. And he was shocked. 85. That means that's like 1.5 a week. He's a trader. Now, he didn't know he was a trader. He would have self-described himself as an investor. But what happened was when his money got into the market, his investorness turned into traderness. And out of those 85 trades, he had 8 of them that were open and closed in the same day. And he assured me when I talked to him, he goes, I've never done a day trade, which is an open and a close in a day. I've never done it. I said, all right, well, let's... And he sent me his results and said, do you realize out of your 85, I said 9% of them were open and closed in one day. He goes, no way. So he was mad. He went back and checked. He's like, I can't believe this, RC. The point is, guys, clarity is power. Clarity is power. This wasn't about a stock pick or knowing what the Fed governors were going to do or the Fed chairman was going to do or reading the tea leaves. This was 100% in his control. And that's why investing with total clarity is a key part in having consistent and reliable returns and performance in your life. It doesn't matter how well you earn. You cannot out-earn confusion. If you want to generate reliable income and grow your money from the market, then you'll need to be clear about what is actually happening. Not what you think is happening or what you want to happen, but what is actually happening. And investing with total clarity gives you that power back. It gives you that stability. Guys, the market is always right. Please write this down. The market is always right. It's you, or it's your point of view. And I understand how this can come across like I'm pointing my finger at you. Guys, I'm on the same side of the table with you. I'm just pointing out to you, your returns are a reflection of your clarity, not of the market. You want better returns? Get clear. Get clarity in your life. The market is always right, just like Mother Nature is always right. No one ever says Mother Nature is wrong. The ocean is wrong. The ocean's never wrong. It's just the ocean. The market is always right. It's your interpretation. It's your approach. It's your checklist. It's your strategy. It's your point of view. It's how you approach it. And all of those are reflected back in your returns. You don't like your returns? Get clear. Okay. Power shift number 2. Plug the leaks, guys. Plug the leaks. In my 2 decades of working with people, I've seen leaks in people's portfolios between 2 and 5%. Now, this is on top of, and we're not even going into that Delbar research that I was telling you, where they're underperforming the market 3x. This is something even completely different. This is even leaks in a portfolio. Now look at the screen here. There's a blue line and a red line. The blue line is moving 2% faster, or has a 2% better performance than the S&P 500. The red line is the S&P 500. Nothing else. I've done nothing else except plugged the leaks. All I've done is plug the leaks, and I've only done 2%. I've only changed the growth of the blue line by 2%. Okay, the point of me showing this to you is 2% to the human brain sounds trivial. And I said 2 to 5, but let me just focus on 2 to, meaning I find leaks between 2 and 5% across the board over the last 2 decades. And this is what a 2% leak looks like to your money. It means your money has grown 89% slower. Now, again, that's hard to understand, but you put $100,000 on the red line, right? And over the last 17 years, that 100,000 grew to 183,000. All right, so it grew. But you plug the leaks in that 100,000, that grew to $260,000, right? So 160,000 compared, I'm rounding now, compared to 80, I said 83, but I'm going to just roll it down to 80 for easy math. That means twice as good. You have 80,000 more. You have your life changes when you have this just by plugging the leaks. So let me talk about this a little bit. There's leaks in people's portfolios. There's leaks in their accounts. There's leaks in how they've automated things. There's leaks in transferring money from the earnings world to the growth world. And if you don't even know what the earnings in the growth world is, there's a bigger problem. There's leaks in the gap between what should be done and what actually get done. There's leaks in fees, commissions, expenses, leaks in diversification. Diversification is a complete myth designed. It's an idea that came out in the 70s. It's not even needed anymore, and people are still talking about it. Leaks in buying newsletters, leaks in taking action when you don't need to. There are leaks all over the place. Guys, you cannot win a race up against another boat without a leaky hull. You want a strong, stable future where you're not caring or worrying about the manipulation that's been going on? Then plug the leaks in your hull. I had a client come to me. This is actually kind of funny. He was a friend of a client, and his friend, he shared the information with him. And he came to me and he said, look, I probably don't need you. I mean, I probably shouldn't have done it, but, my friend invited you into his life and he did everything. And then based on that, he told me what to do. And I'm like, that's fine. That's fine. And he's like, look at my portfolio. And this guy had done well in his life. He had $2 million in his portfolio. He was 65. And he had two symbols. And they were buy and hold symbols. So no trading, no back and forth, nothing. 2 symbols. And even him, I showed him where there was a huge leak just by these 2 symbols. Now I don't have time to get into it, but one of the symbols was a total bond market index fund, right? So he had a percentage of his money in the bond market. And the other one was a total stock market global index fund, right? So he had a ticker symbol that represented both the US and Europe's, stock market returns. And I was like, hey, this is a pretty good looking portfolio, complete clarity. I get that, but you've got a leak. And the leak was a significant leak, even with a very straightforward portfolio that he had. So the point is that it's hard to see your own leaks. And it turned out that 75% of where his money was in a very leaky symbol. And I'm not talking about, the expense ratio could be smaller or something like that. It wasn't even that. It was a way of looking at the market that he hadn't even thought of, which I will get to, which is shift number 4. You have to plug the leaks. Whatever portfolio you have, it's 100,000, you're leaking 2 to 5% a year. It's $1 million, yeah, you're leaking $20,000 to $50,000 a year. That's real money. That's money that is not growing for you. Okay, let's talk about the third shift. So this third shift, guys, is filter the noise. Filter the noise. I want to talk about filtering the noise with this image here. And if you don't know who this is, not the actual character, but hold on a second, guys. I have to take a drink. This is a Rube Goldberg cartoon. There is so much information getting thrown at you, even today, this week, this month, this year, this quarter, this lifetime, that is absolutely shutting down your brain. So look at this. And this is what I'm talking about. People are told you got to do option selling. And you got to do covered calls. No, you got to buy put protection. That's what it is. You got to do put protection. No, day trade ETFs. No, it's actually buying and hold. No, you got to rebalance every 12 months. No, it's a 60-40 split. No, you got to diversify over 10 asset classes. No, you got to read the Technology Breakthrough newsletter. No, you got to read up on small caps. No, retirement equities. It's all about retirement equities. No, it's dividend. It's dividend returns. You got to get dividend returns, monthly income, hedge funds, passive income, REITs, hard money loans. It's hard money loans, guys. That's what it is. No. It's growth stocks. It's rotation. It's just, okay. It's Forex. You got to do Forex. It's alternative investments. It's do nothing. It's put your money in CDs. Guys, stop the insanity. It is killing your future. It is making your future more unstable. It's literally hurting your life. You want to know why you have sleepless nights, wondering when the next shoe will drop? Some people being stuck in shame or embarrassment, right? They can't tell their wife what's actually going on the last 5 or 10 years. This is real stress. This puts uncertainty on your own life and your marriage. This is insane. You have to filter out the noise. You have to filter. This is not a choice. I measured it. You're getting hit with as much as 3,000 symbols a day. The newsletter industry, between their teasers and they're paid for and they're free and they're upsell and they're promoted. The money channels, what they talk about, the scrolling symbols on the bottom, the ads between the shows, blogs about income, about growth, about value, about biotech, about tech, about option trading, about Forex. Then all the talking heads. Then your big box advisor telling you, or maybe not telling you. And then your own looking. You are getting slammed. You are getting slammed with information. And your brain is screaming. You know how I know your brain is screaming? Because I've studied it for 2 decades. And not just me. Science has a very good track record on overwhelming the prefrontal lobes. And when your prefrontal lobes get overwhelmed, which by the way is pretty easy, your prefrontal lobes can only handle 7 things at once consciously. And once it goes over that, they shut down. And then they start making really bad decisions because they're fatigued. And then your limbic system takes over. That's your emotional system. And you do not want your limbic system making investment decisions. This is killing people's future. This is hurting marriages. This is creating uncertainty in people's lives, why they have fewer and fewer choices, why they're frozen on the one side of the river with the better life on the other side of the river, and they're just frozen there with their money in cash since the 2008 global financial crisis. They're literally frozen. Frozen? They're literally froze with fear. And part of it is because they're inundating their lives with this noise. And guys, this happens 6 to 7 days a week. You're literally shutting down your brain every day of the week. It doesn't have to be that way. And guys, I just want you to get this. The newsletter industry, first of all, it's a $1 billion industry. Those picks are written by the best ad men in the business. They know the science of how your brain gets triggered. That's why and how they make 7 figures. They don't all make 7 figures. 6 figures, 300-400 grand a year writing those promos. It's on the back of your savings, and you know it. That's why you're here. They know. They know. They know that when something's making new lifetime highs, they sell research on it. They literally have booklets to tell their writers, hey, if oil's making new lifetime highs, we're selling an energy newsletter. Hey, when people are really scared about the market falling, we're going to sell a put option strategy. They know this because they know the dopamine is at the highest to sell these products. And it's out of your control. These are the best ad men. But it's at your cost of your future and your stability and your marriage and your certainty and great, long, well-slept nights. That's what it's costing you. Filter the noise and get a better life. This is completely in your control. So let's cover what we've covered so far, 3 shifts. So first, what you've learned. If you have not already gotten it, the first 3 things you've learned are all in your control. Clarity, getting clarity, completely in your control. Completely in your control, guys. Has nothing to do with the market. Plug the leaks, in your control. Filter the noise, in your control. This is all up to you 100%. The change in money is easily measured in, depending on what your account size is. If it's 100,000, what we've just talked about is at least tens of thousands. And I know over a decade, and even if you're 70, you're a long-term investor. If not even just for yourself, but who it's going to go to, your spouse and your kids. That I know because I've done the measurement, even just plugging the leaks doubles the size of your account in less than 15 years, even if you're not around. It's about creating more stability for yourself, a change in money. But even immediately, right, it's tens of thousands of dollars of difference each year. And again, if you have $1 million portfolio, you can measure it in hundreds of thousands of dollars. But probably even more important, it's just the quality of life, right? It's having a great sleep. It's having a great marriage. It's someone saying to you, oh my God, did you see what the Dow did? Did you see who got elected? And you go, I'm good. Yeah, my strategy takes into account all these things, right? It's a better quality of life. It's being able to go to Italy on that 2-week vacation, business class, and not worrying about whether you can afford it or not. But even more than that, it's knowing you have enough money. Okay, now we have 2 more shifts. Now, a little disclaimer about the next shift, because it can sometimes get people giddy and they get kind of stuck on it. And I told you before when we started the 5 shifts that there's 5 shifts. And the clients who have done the best over the last 2 decades, they use all 5. I will tell you, the ones who just use this one, they don't have the returns of the clients who use all 5 shifts. But it is an incredibly powerful shift. It's one that changes people's lives and futures. And it is so straightforward and it is so clear. And that's part of the reason why it works when people implement it. So let's get to that. So power shift number 4 is the stairway to consistent returns. All right. So we're talking about consistency and reliability here. Again, I don't work with people who are looking for the next moonshot, pick of the month, make it all back. I'm looking for people like, RC, I want some good, consistent, solid returns. I want to eliminate the insanity, the craziness. Show me the consistency. Show me that stair step. So I want to show you an image here, and I really want you to look at this. And we're going to spend a minute on this. So there's 2 prices. There's 2 lines on this screen here. One is the S&P 500, and that's the red line. And you can see how roller coastery it is and has been. And yeah, we know, and over the last 17 years it's gone higher. But you can see here between 2000 and 2003 it fell 50%. And then look, just to get back to break even from where it started, it took 1, 2, 3, 4, 5, 6 years just to get to break even. That means you lost 6 years. You're back at the start line 6 years later, just at the start line. So it's just not the loss of the 50%. It's that it took 6 years just to get back to the beginning of where your money was back in 2000. And then it happened again and this time it was a 58% fall. And this time, if we look what it took to get back, 1, 2, 3, 4, 5, 6 more years to get back to the beginning. And in many ways, the beginning here was the beginning back in 2000. This is a roller coaster, guys. This is the insanity. This is the craziness. This is why things feel unstable, because you're on a roller coaster. It's a really fun ride, but not like the 12th time you do it. No one wants that. Look at the blue line. This is a strategy called Market Probability 1. Look what it does. During the market sell-offs, of course there's market sell-offs. It takes some of the hit. We'll talk about that in a minute. It's a small hit. But then it starts stabilizing or gets stable very quickly. And then when the market gets stable, it goes with that stable uptrend. And then the market gets unstable, it sidesteps. It just steps aside and says, hey, let's bring stability back. And then it starts moving up with the market. And then if there's some instability, it just steps aside and then moves up with the market. And if there's some instability, depending on what the instability is, if it's a smaller level of instability, it stays with it because there's going to be market corrections and it keeps moving. So it's not magic, but a lot of my clients are like, it's kind of magic, RC. And I remember in the depths of the 2008 global financial crisis, I was getting like wine in the mail and handwritten letters from my clients saying, you saved our lives. We didn't lose half our money, right? I don't have to work 5 more years. I can stop working at 60 or 65 or 55. I don't have to work 5 or 10 more years. It changed their life. Being on the stairway, just stepping up. And that's what stability looks like. That's what consistency looks like. And that's what knowing when is it a correction, like a healthy correction, or is it something that's potentially bigger? That's important to know. And that's one of the differences that makes a difference. And that's why this shift is very important, is to get on the stairway, to not be on that roller coaster, to get out of that pick of the month newsletter world. So let's talk about a couple things here. The old way, diversification, rebalance, option buying, option selling, individual company ticker symbols, research global markets, GDP rates, investment newsletters, macro trends, ETF trading, deep value investing, Forex, IPOs, and the list gets bigger and bigger and bigger by the year, guys. This is cross your fingers investing because it doesn't work. Now compare this to the stairway approach, right? Just ask a question. Should I even be in the market? Should I even be in the stock market? Should I even be in the stock market? And your brain remembers that stair-step blue line from a moment ago. That's the question you ask yourself, because the market knows all that other stuff we talked about, and a lot of that other stuff on the previous page, the diversification, the rebalancing, all that stuff, it's to sell ticker symbols. It's not what's best for your money. But the new way, knowing whether you should be in or out. And most of the time you're in, but when you should be out, you really should be out. And hey, what's the best location in the world? Is it domestic or is it international? Because they both don't always go up together, and it's not best to be in both of them. Just plug the leaks. Hey, what's the best size? Is it mega? Is it large? Is it mid-cap? Is it small? And oh, by the way, that best size, it stays the best size for years and years and years. This is not about trading. I've told you that over and over. Hey, and what is the best type of stock? Is it energy? Is it finance? Is it healthcare? Is it staples? Is it discretionary? Is it utilities? Those leaders stay leaders for years. And I want you to get that. It's about asking the right questions and then knowing what to do. And when you do, your money has a completely different trajectory. You have stability, you have consistency, you have reliability. This is rules-based investing. It's rules. What are your rules? What is your checklist? What does your strategy look like? What are the questions? The questions have to be based, and they have to be objective and measurable and specific. And that's not what people are doing. They're using fundamental information like, well, the market is overvalued or undervalued or fill in the blank. Or they're using 1970 ideas that are not helping them. You want your money to have consistency? You want to eliminate being at the whims of the market and manipulators, then ask the right questions and get on the stairway to consistent returns. So look, would you rather have lost 11% or 49% in 6 years when the dot-com crash happened? Because look, I just want to point out, the strategy fell 11.39% before my clients got out. And then it started recouping that losses, right? But I just want to point out, what would you rather have lost, that 11.39% and started recouping your losses, or either lost the 49% and 6 years of your life? I think most would say that 11%. And then during the global financial crisis, now it just happened to have also been an 11% number. That's more arbitrary than anything else. But what would you rather have done during the global financial crisis? Lost, let's just round it up, almost 12%, or 58% of your money in 6 years? And maybe you didn't lose 58% of your money. Maybe your big box advisor had you in a balanced, I'm air quoting here the word balanced. You were in a balanced approach. You were in a conservative approach, and your money only fell 40%. That's ridiculous. 40% in 6 years? That's a lot when you're 60 and there's a lot of uncertainty and your earnings runway is shortening, right? Your earnings runway is how much longer you're going to work. That's a huge difference. Getting stability by being on the stairway is key. Okay, the fifth and final shift is invest in mentoring. Do not do this on your own. People who do this on their own, they get hurt. So you invest in mentoring. Everyone should have I almost said inventor. Everyone should have a mentor. Excuse me, guys. Everyone should have a mentor. And here's why. They bring two things. Okay, one, new possibilities, new points of view. And just case in point, there are new ideas in your brain. There are new possibilities in your head because you made time for this training. And the other thing they'll do is they will keep you accountable. Money is connected to your identity, and there are things you are up against that you don't even realize. And over the last 2 decades of working with individuals, it's these invisible things that end up hurting people's personal beliefs. Remember back, I think it was in Power Shift 1, Invest with Clarity, I said, the market's never broken, the market is always right. Your returns are a reflection of your clarity. Your returns are a reflection of everything, your clarity, the noise, the leaks, how you invest, everything. That the market's, mirroring back to you what's not working. A great mentor will give you great ideas and make sure you act on them. A great mentor will put together a powerful group of people, which I've done, all working towards a similar goal. Guys, this multiplies your effectiveness exponentially. Literally, we have people with $500K net worth working alongside people with $10 million net worth. Everybody wins. You can have a $300,000 net worth. It doesn't matter. The point is, and there's been studies on this within school and education, that kids who are really smart, they get smarter when they're not just in rooms with just super smart kids. They want to have, research has shown that you want to be in the room with everyone, right? The guy who has $1 million net worth, being in the same room with the guy with the $10 million net worth or the $100,000 net worth, that grows all three of those people's net worths better. Same thing if it was a $100,000 portfolio, $1 million portfolio, and a $10 million portfolio. Being in a group of people who have similar goals, who have the same 5 shifts, all their money is safely accelerating because of that structure. You have to invest in mentoring. It's not enough to know what to do. And parts of you already know that. Parts you already know, it's not more information. I mean, if you knew it was information, everyone with an internet, with Wi-Fi and internet access would be millionaires or decamillionaires or centimillionaires or billionaires. So it's not information. That's not the difference that makes a difference. It's that accountability. It's making sure that you're doing what you're supposed to do, not what you thought I heard it as doing. Mentoring is a key part. So today I promised a few things, and I'm going to go over to just show you, like, hey guys, I promised them and I fulfilled on them. So one, how to never miss out on the next major multi-year stock market move. Shift 4, the stairway. It gets you in all uptrends. How to produce reliable and consistent returns without trading, reading newsletters, or spending time in front of the computer. Even if that seems like a ridiculous thing to say, given the volatility in the market and the economy, it can happen. And I showed you how most of these things are absolutely in your control. 4 of the 5 shifts are 100% in your control. And the 4th shift, the stairway to consistent returns, everything, all the steps within that, 90% of them are in your absolute control. How to never be hurt again by large market falls. How you will know with complete clarity you have enough money for the rest of your life. How to eliminate the investment noise that so often hijacks your brain into thinking the next crash is imminent. This is dangerous stuff, guys. This is dangerous stuff. So the 5 power shifts you need for reliable, consistent returns: have total clarity, plug the leaks, filter the noise, choose the stairway to consistent returns, and invest in mentoring. These are in your control. So now you have a choice. Now you can choose. You can take those 5 steps, and you know what? You'll do better, and you'll figure out what you need to do over time, and you can take those and figure out how to get those, and that's good. And most people won't. Just to be honest, most people won't take them. They won't follow through with implementing the 5 steps. And so you have a choice. You can try to do it on your own and hope it works out. And I'm guessing if you're on this call, you've tried to do some things on your own and it hasn't worked out. Or I have an offer. And no, it's not about you spending money or getting out your credit card. So let me show you how I can help. My team set aside some time in the next week to speak with you personally about how you can apply these ideas to your wealth and investments starting today. All right, so I've set aside time, and so has my head coach, to speak with you. The cost is absolutely free. It's free, but there's a couple things you have to do. So who is this for? You must be absolutely committed to shifting your behavior, guys, with complete honesty, with complete clarity. Do not waste my time. I will not waste your time. All right, if I get a time vampire on the call, I'll shut it down very quickly. We're not talking about ticker symbols. We're talking about how you can reclaim that power, that consistency, how you will know you'll have enough money. You've already tried the big box advisor and you've tried the pick of the month newsletter industry and realized neither of them can help. Do you realize that that's where people spend their entire lives, either in one or the other or both? And they're literally being inculcated. They're literally being taught wrongly about how to invest, literally based on big box advisors, conventional advisors, and the newsletter industry. And they never realize that there's a third choice. And you're ready to finally know what really works and implement it. So one thing, guys, really, no time vampires. If you're stuck and you're super, super scared and you know you're not going to do anything, okay, that's fine, but don't get on the phone with us, all right? Because what doesn't work, and I talked about this before, is the person who's just frightened to death. Their money's been in cash for 8 years, and they know they're not going to do anything. And you know you're not doing anything if you've taken other courses. So I'm being honest here with you guys. Only apply if you're looking for that shift. Okay, you got to be earning at least $150 a year or have at least $250,000 at risk in the market or in savings. And like I said, you're not looking for the next moonshot to make up for lost time or to get all your money back in one stock. Those are very dangerous behaviors. You have been frozen with fear and you're ready to take action now. Okay, so why are we doing this? First of all, on the call, we'll help you get complete clarity about what you want your investments and wealth to look like and the exact steps you should take to never miss out and never be part of another major market crash. Why we're doing it, this is how we make connections with people. Going through these filters are a very effective way of filtering out people that are running kind of the shenanigans and time vampires. It's a very effective way. If you want us to help and we think it's a good fit, we may invite you to become one of our new clients that we take this month. But there's a couple things you have to know. First of all, click below to get on our schedule. Now, if there's not a link below, let me just tell you what next steps are going to happen. And I'll have a link in the next screen in a second. So what's going to happen is you're going to click the link, or you're going to go to a URL. I'm going to show it in a second. And it's going to be a scheduling page. So you're just going to go ahead and pick a schedule. Now, I just want to let you know there's 2 of us that take all of these breakthrough strategy sessions. Only 2 of us. We are very good with managing our time. So this is not a scarcity thing, but we only have a couple days open throughout the week. All right, so if you go to the schedule and it's already full, we're not playing games with you. It's just you took too long, or that week has already filled up. If that is the case, here's my suggestion to you. You email our ops manager, Patty, Patty, at Fearless Wealth. And you say, hey, I want to get on the schedule on a breakthrough strategy session. She will then email you when a next day opens. And you can even let her know, like, Wednesdays are best or Thursdays are best. I'll let you know, we never have these breakthrough sessions on Fridays. So it's 2 of us. We manage our time very well, as I hope you do too. And so once you schedule it, then the next thing you're going to get to is a questionnaire page. It's about a 5 or 10 minute questionnaire. Please fill it out. Please include your phone number. If you live overseas, we'll need your Skype call sign. If you don't fill out the questionnaire, or if you don't give us a phone number that works or a Skype number that works, then we will not have the meeting and it will get canceled. If the link below doesn't work, or if for some reason there's not one, you can just go to fearlesswealth.com/apply. Really straightforward, fearlesswealth.com/apply. I want to thank you guys, and I'm going to talk to you briefly about the free gift, but before I do that, just thank you for being here. Thank you for listening. I appreciate you being in my world. Get a breakthrough strategy if you see yourself, and we've kind of, as we've painted the picture of who we can help best, you're saying to yourself, well, that sounds like me. Get that breakthrough strategy session, and we'll connect, and we'll see what we can do. So the guy who talked to the hedge fund group was Adam Robinson. And the one thing he said to the group was, he goes, money, the place to make, he said 2 things, but I'm just going to share the one that was the polarizing one. He goes, whenever someone says it doesn't make sense, it doesn't make sense. This doesn't make sense. He goes, that's where the money is. Because what he's saying is the market always makes sense. It's your point of view that doesn't make sense. And so if you're ever, when you catch yourself saying, this doesn't make sense, this doesn't make sense, that means it's your interpretation of the market that doesn't make sense. And that's often where the money or the stability or the reliability or the consistency is actually just lying there in the corner. Thank you guys. I appreciate it. Thank you for allowing me to be a little sick during this training. I am probably going to go take a nap now. But the good thing is, when we speak, you will not get any of my germs. So you guys take care. Thank you. Bye.